I want to ask our panel, the Fitzgerald Group Principal Keith Fitzgerald, UBS Financial Advisor Mark Smith, and Walser Wealth Management President Rebecca Walser. Keith, let me start with you because it's the market to me. After July 30th, when the $600 ran out, I thought we would go off a cliff. The market did not. Then to me, it seems the market assumed, though, at some point we would get fiscal stimulus. Now it looks like maybe we won't. And the Federal Reserve also not really coming through like people thought. I think the market's trying to force their hands.
I agree with that sentiment. And there's two things. I don't think it's actually the markets themselves. I think it's many of the big traders who are highly leveraged and addicted to cheap money. So they want that tailwind of the Fed so that they can't lose. But the really cool thing about it for investors is these are the kinds of moments where you have the advantage over Wall Street because you can concentrate on companies like Apple, on companies like Microsoft that have a bright future, irrespective of the White House, irrespective of the Fed. That's the stuff I'm focused on and very excited about, frankly.
This morning we got the existing homes data. The initial jobless claims report. And again, it was bifurcated. So we saw on one hand, we're still holding steady. In fact, both continuing claims and initial claims came in higher than expected. But continuing claims came down pretty good. And the total amount of folks that are receiving unemployment benefits down by almost 4 million. So, Rebecca, this does complicate the issue, right? Because on one hand, you have some people saying we're moving in the right direction, but it's hard to see, even with 26 million Americans receiving some form of unemployment benefit, how we do not need at least one more nudge.
Yeah, there's no doubt about this, Charles. We need another nudge. I'll go with your language. I mean, I felt sorry for Powell a little bit on this week because, he can't do it alone and he's doing a lot. And Congress obviously stepped up to the plate with CARES Act, but everybody knows that this is running out. October is a deal breaker. We've got to have more or we've got to get people back to work. And we don't have that yet. And that's not happening. It certainly is not going to happen before the election because it's been so politicized. So we need more. And I think you're right. I think the market is saying, look, this isn't going to work. We're running out of steam here and get us some more. And I'm not it's so weird for me because I'm not a big government interventionist. I don't like it. But at the same time, I don't like us being shut down to Great Depressionary levels and expect everything to just work out magically. It's not going to work. It doesn't happen.
Yeah, Mark, I think there are a lot of folks who are saying this is not a regular time. So a once in a century pandemic, people forced not to work, businesses forced to close. What are your thoughts on whether or not the market is signaling to the Congress, to the Federal Reserve, that they need to act sooner rather than wait?
Yeah, I think that the market's definitely saying that we need a second stimulus package. The problem is we have such a huge discrepancy between the Republicans and Democrats on agreeing with anything right now. And with the Supreme Court now in limbo, that's going to even add more fuel to the fire in regards to not being able to get something really done. So, we think that there's going to be a lot of volatility between now and November 3rd because of that fact. And even probably into January, if there can't be any serious agreement on any kind of issues, we're going to see some volatility here.
And which is interesting about this, I'm going to circle this now to the consumer because, all right, many people will be surprised to know household wealth now at record highs, and people are spending money. We're spending it differently. I mean, the existing home sales for last month, you heard Neil just mention it, nothing short of amazing. Even restaurant stocks acting pretty good. Darden is your number one percentage gainer after a pretty good earnings report, a massive beat, in fact. So I want to go back to you, Mark, on this. This bifurcated economy is reflected somewhat in the stock market, but is it enough? Can the consumer actually bring us out of this if there is no more help?
Yeah, because you're seeing a huge difference between the haves and the have-nots right now. You're seeing folks moving out of major cities, saving more than they ever have in their entire lives in their savings account and buying second homes, third homes, et cetera, because interest rates are at an all-time low. I remember my mom, got her mortgage, it was 9.5% for a 30-year fix. That's why you're seeing the differences between purchases of folks that have jobs and those that don't. And unfortunately, most Americans are not in the haves category. And that's why you're seeing, huge discrepancies between the stock market and the general economy.
And yet, Rebecca, the market seems to continue to anticipate that the consumer somehow will be able to step up to the plate. Yesterday, of the top 20 movers, and the 9 of the stocks were consumer related, either home builders or retailers. Nike, of course, was number one. What do you make of that?
It's so. This is just a very unusual world, Charles, because you can't look at the economic data on the one hand and see, and the economic data is also bifurcated. Like the home sales, like you said, it's phenomenal, and consumers are spending, but we're spending differently. We're obviously ordering a lot more things, and we don't have the entertainment spending, we don't have the luxury spending, we don't have the travel spending. So there's only so long that this can all stay this way until everything collapses and crashes, because America is not built for Americans to be sitting at home spending money at home online. Like, we have entertainment venues, we have restaurants, we have bars, we have all these things that are failing while Nike's soaring, and we need to get back wearing our Nikes, not just buying them.
Right. Hey, listen, I've already said I'm going to every single concert every week. If you want to find me on a Friday or Saturday, I will be at a concert, and I don't care who's playing. Okay, I'm letting you know right now. Hey, let's talk about growth, because we've been in the show for about 4 minutes and haven't brought it up, especially technology. Keith, you've loved these names. They've sort of taken a drubbing. The rationale for buying them, to keep buying these big tech names.
The rationale is very, very simple in my mind. I think this is a bet on the digitization of our lives. These are companies that can change a line of code and add $1 billion or $2 to the top line. It's growth that is going to occur regardless of the pandemic, regardless of the political discord, despite the fact that the virus may make a resurgence. So are they beaten down? Are they scary? Is it tough to buy? Absolutely. But history shows that's exactly the kind of stuff you want to focus on even now.
Mark, I know you like tech, but you also like communication services, energy, and the 5G rollout. Energy, what is going on there? It's now 50% this year. I'm surprised that you want to buy it, other than the fact, I guess, it looks cheap.
Listen, at the end of the day, everyone's not driving a Tesla. So, when we do get back and get a vaccine and we get back to normal, you're going to have these stocks have a tremendous amount of value. And so that's something you got to look at over the long term. But I think in the short term, you have a lot of issues if people are continuing to stay home and don't want to go anywhere and talk on Zoom all day. So that's the problem. That's the long-term view, and the short-term view on the energy sector. Tech, everyone should love, because in a pandemic, it's the only sector that's going to do phenomenal numbers. And you're seeing that in almost every single tech stock out there. Having a small correction recently, but I think that if this continues for the next year or two, like some of these epidemiologists are predicting, then tech sector is going to continue to have a bull market here.
Yeah, well, we keep buying it on dips. I think everyone probably should until it stops working, because you made a lot of money so far. Mark, thanks a lot. Keith and Rebecca, I agree. America was not built for this. We want to get outside and go to a concert. All right, folks.